It is a BOC-themed hot picks. We are taking a look at the best picks, both on the short and the long side, in currencies. Let's bring in Kathy Lien, Managing Director of BKForex. And Kathy, it's so nice to see you. Your first hot pick is a bearish on that Canadian dollar. Let's walk through what informs some of that sentiment and maybe link it to that rate decision we got today.
Well, I was bearish Canadian dollars ahead of the rate decision because, no change by the BOC was pretty much a done deal given the weakness we've seen in some of the inflation data as well as the GDP report. Now, as your previous guest mentioned, the central bank basically walked through all of the pieces of economic data to explain why they've decided to hold rates steady. And the Canadian dollar has actually sold off after the rate decision, in addition to losses we saw ahead of it. So I remain bearish Canadian dollars. And I really like selling CAD yen in the near term because I think, Jerome Powell was speaking again this morning, and he reiterated that they haven't made a decision on 50 basis points in March, which, is a bit more concrete than we heard from him yesterday. The US dollar has sold off, dollar yen has sold off. So I think CAD yen on the short side is a really nice play.
That's interesting. Can we talk about it? I know for a second, though, in CAD USD, because I think how a lot of our viewers track it. It got as high as 80 cents basically this time last year. We're down to 72 cents. What do you think about in terms of downside relative to that cross?
Well, in general, I am still bearish the Canadian dollar against the US dollar. I think, they are on hold. The Fed plans 25 to 50, probably 50, and the terminal rates, as Powell said yesterday, is probably higher than what the market thinks. So ultimately, I think the Canadian dollar is probably destined for more losses. And if you're short, I would stay short. If you're not short yet, I'd be looking for opportunities to sell on rallies, which we could get on the back of Friday's U.S. non-farm payrolls report and Canadian jobs report.
Now, the point was made that sometimes the Canadian dollar does trade on that rate differential and sometimes it doesn't. Sometimes oil, for example, is more important. How do you factor that in?
I think this month interest rates are front and center. From Canada, from the U.S., I think we're still looking at the market's still guessing what U.S. could do in rates, and that differential I think is going to continue to drive the loonie for the rest of the month.
All right, let's get to some of your other picks. You want to go long the euro, so you see more appreciation for the euro against, I assume, the U.S. dollar, but we can talk about which cross you're talking about. We've already seen quite a rally from those September lows. What's informing your view on euro strength?
So you're right, we've seen quite a rally since the September lows, but euro is still very cheap on a historical perspective. And the European Central Bank has been unambiguously hawkish and indicated that 50 basis points is happening this month, and the market itself is pricing in 150 basis points by the European Central Bank until they're done. So there's a huge misalignment between market expectations on an interest rate level versus the way euro is trading right now. So
is that because the growth factors have been softer?
Well, you're right. There has been some softer economic data from Eurozone, particularly German retail sales numbers this morning. But ultimately, the Eurozone is in a recovery mode. And it's also because the Fed is in the same position as the ECB. But I think that the ECB is going to raise rates for longer. And I still think 105, 106 is very cheap in the euro. And I think it should be trading 2-3 cents higher on a medium-term basis.
What about the Swiss franc, which you also like? What are the factors there?
So once again, interest rates front and center. The inflation data and the unemployment rate have seen significant improvements, or not improvements, but at least uptick in the inflation rate and improvement in the unemployment rate. And the Swiss National Bank could raise interest rates as much as 75 basis points this month, which would be the biggest move of all the developed countries. So I think, the Swiss franc on the long side is a very nice play. I like Swiss yen. I like selling CAD Swiss. I think in general, we're going to see more strength in that currency throughout this month.
Okay, I'll ask you a bonus question. Just curious about your views of the U.S. dollar, which obviously has come off from its peak in the fall, but has bounced since the end of January. Do you see it kind of range bound? Do you see a breakout to either the upside or the downside? How do you think about that?
So I think in the next 2 weeks, we're going to see profit taking in the greenback. It's particularly, on Friday, when we go into Friday's non-farm payrolls report, it's not going to be as strong as that 500,000 number we had last month. And also next week, we have inflation and retail sales data from the U.S. And a lot of retailers have warned about consumer of a pullback in consumer spending. And we know from the commodity prices that inflation has been easing. So all of that is going to make the market, really second guess 25 versus 50 basis points. I think ultimately the takeaway message from the end of month FOMC meeting is that they're going to hike, and they're going to continue to hike, aggressively over the next few months. But between now and then, I think that some of the data we're going to get is going to cast doubt on the aggressiveness of the Fed this month.